Have Kranthi Bathini of WealthMills Security. Kranthi, good morning. A very happy new year to you.
Loisha, good morning and very happy new year to you and to all the viewers of Money Control.
Thank you, Kranthi. Kranthi, our 3 months of correction, do you believe that the markets are seeing a positive place to start with in 2025?
Yeah, it's a good note. Whenever market comes to the range of 200-day moving average of Nifty, we tend to see some kind of bouncing back and buying interest is that's coming back into the markets. So markets are by and large they're right now trading at a very tight note. They're in range mode at this point of time. But as we are getting into the new year, market tried to discount the earnings of 26 and 27, so which will increase the headroom for the markets from this level. So what we are seeing, this range of the market should bottom out in this range, and most probably we are headed towards the previous highs.
Okay, let's divide into first half and a second half of the market. So, how do you expect the markets to move in the first half, and do you expect the pace to pick up from the second half onwards of this year?
By and large, today is the FPA participation is going to be very minuscule because of the holiday season is going on, and also today majority of the markets are closed on account of the New Year Eve. So we tend to see some kind of a very low volume kind of day. But what we can sense is we are going to get the further direction of the market during this week, and also the point to ponder upon us. The FPIs have been the net sellers during the 2024. They have sold for a tune of more than $60 billion. Luisha, it would have been a 5-6 years back or a decade back if the FPIs are exiting India for such a tune of quantum of money from Indian markets. Markets would have been entered into a long bear market. But this time is different. The markets are resilient and resurgent, and markets are still in an uptrend. So these are the changing dynamics of Indian markets at this point of time. Definitely, markets stands at a strong note, despite of here and there some kind of pessimism that do creeps into the market. But Indian markets are headed towards a new highs in the coming quarters.
Okay. You said that the new highs could be expected. What are you targeting? Is there any target point that you're eyeing for Nifty?
Uh, Most probably markets can head towards the hitting the previous highs of Nifty, which is on cards always 16,500. This can be the year-end achievable target, which can be possible for Nifty, which is on cards. Lavisha, Indian markets are surprises the perennial bulls, and also they surprises the perennial bears. They both the pessimists and the optimists get surprised with Indian markets. That's what the beauty of Indian markets is concerned. So by and large, we are in a positive direction. Of course, we do come across some kind of a sense of slowdown in growth and all, but Indian markets have been crossing the wall of worries. But 2025 is going to be the stock pickers market. That's what also proven in 2024 also. By and large, it's a stock pickers market.
That's right. Like, how are you finding the valuations at this point in time? We will soon be entering the Q3 earnings season, Kranthi. So, are you finding that the valuations are still elevated, or do you expect that they have become attractive after the 3 months of sell-off that we saw?
With the recent consolidation and also the Q3 earnings are definitely, as you rightly mentioned, in next few days we are heading towards the Q3 earnings season. By and large, we can see some kind of resurgent and resilience with respect to the Q3 earnings are concerned because of the Q1 and Q2. There is a kind of a slowdown in terms of the capex and also erratic monsoons that has impacted the domestic growth. But Q3, what we can say sense at this point of time is we can expect some kind of a recovery in terms of the earnings. That's what we are anticipating at this point of time. By and large, Q3 is going to be a better quarter when compared to the Q2 is concerned, which is the first half of the year. In terms of the valuations are concerned, if I have to compare the market in a longer term perspective, and for an investor who is coming up with a investment horizon of 2 to 3 years, definitely the valuations looks attractive. For medium to short term, of course, some kind of earnings disappointment was there, but for an investor who is coming with a time horizon of 2 to 3 years, definitely it's a good entry level for the markets for the investors.
Okay, and what is the next big risk for the markets? It could be the US Fed policy, it could be the Trump's policies that the markets are on wait and watch mode. But what are you watching out in particular for now?
Yeah, definitely. In the month of Jan, by 22nd of Jan, we'll have the new administration in US, and the new administration is pro business by and large. Of course, there are some kind of news about the trade wars and the tariffs and all, but by and large, what we believe is Indian markets are going to take the advantage of these geopolitical policy making decisions are concerned. Uh, the Fed is in a very dichotomic situation. They have given a guidance of reducing the interest rates. Now, still for them also, inflation is the key concern at this point of time. But the dynamics of U.S. economy is quite strong. So how they are going to balance the growth as well as the inflation is the crux. Coming back home at India, how the MPC led by the new Reserve Bank governor, how they are going to have their stance with respect to the monetary policy is concerned. This is also very important thing. These are the crucial parameters one need to look forward. By and large, for the global markets are concerned, the U.S. Administration, the new administration led by President Trump, is going to determine the dynamics of the market. But India, by and large, we are going to see one is the MPC, the rate cut, how RBI is going to give, whether it's in a baby steps or how the cycle is going to start. We need to keenly wait and watch. By and large, the current RBI governor definitely is going to give elevation towards growth. And also, we have the big event for the market, which is in the first of Feb, which is the full-fledged budget for the current government. So these are the major immediate triggers for the market going ahead.
Okay, all right. Kranthi, you did mention about, India could benefit out of the trade tariffs that Trump has been talking about. But what about the stronger dollar and the yields, which is also going up? Because Trump has been quite vocal about US exceptionalism and making America great again. How would you place FIIs at that point of time, and would they be even more hesitant to come back to emerging market like India?
You made a very valid point. As U.S. economy is moving from strength to strength, some kind of the FPF flows have been what we witnessed is some kind of money is chasing the mature market like U.S. markets are concerned. But some kind of risk appetite still there with respect to the emerging markets are concerned, especially markets like India, which offers a strong earning visibility and the growth visibility for a longer term perspective. So some kind of a long only money which towards getting allocated towards territories like India is still there on the sidelines. So I'm going to sure once the growth resumes in India and also the corporate earnings gives the strength to the investors and confidence to the investors, I'm sure definitely the FA flows are going to come back to markets like India. We are pretty much sure on a medium to longer term perspective, the long only money which is towards the emerging markets like India, definitely it's going to come back. Some kind of money has been getting allocated to the large markets, but still there is a ample liquidity waiting in the sidelines to get into markets like India at a appropriate time.
Okay. So FI flows will come back, but it might take some time for them to return at this point of time. But what does it mean for large caps then, Kranthi? Because FIs are major owners of the large caps in India. So can we expect that the large cap rally is expected to remain a bit subdued in the first half of this year?
The first half of the year, the earnings are crucial for these large cap companies. Once the earning revival that takes place, we can see some kind of margin of safety, and also the legroom for the PE expansion can happen in the large cap companies. So that can be possible. One thing is the corporate performance of the companies, and also from the government policies, and the rate cut can give some kind of headroom towards the corporate earnings going forward. By and large, in the first half of the year, the large caps are can be in a consolidation phase. There can be a selective buying, and we need to expect the support for the Nifty as per the large caps are concerned, names like Reliance Industries, HDFC Bank. These are the pockets of the large caps where the heavy lifting is needed for the markets to go forward. But by and large, it's going to be a stock specific market. There are some funds across US also who are keenly observing the developments in Indian markets, and if we interact with the fund managers originated from US, they are optimistic about the prospects of Indian markets on a longer term perspective.
Okay, all right. But now that you said that we are beginning with the Q3 earnings season as well, how should investors churn their portfolio? Any sectors that they should be keeping a watch on and a tab on?
As per the medium to long term is concerned, one can keep names like the infrastructure, which is going to be the major theme for the government going ahead. And also the consumer, the domestic consumer, the sentiment has been quite weak. But in terms of the long term prospects are concerned, we see the Indian consumer can be increasing their pocket of consumption. This is a new theme that one can keep on their radar. And also the new digital age companies, they have been outperformed names like Zomato and Swiggy's of the world. One can keep this theme on their watch list going ahead. But the major center of the theme for us is the defense is going to be the interesting theme. These stocks have witnessed some kind of consolidation and correction from its peaks. On an average, names in the defense space, they have corrected 15 to 20% on an average. So, but still, with respect to the earning visibility and order book of these companies, one can still get a mid-teen kind of returns from this sector. So these are our primary focused sector, and also power is going to be one of the interesting theme going ahead. That can be green energy and also the nuclear energy. That's where the government reforms and major policy decisions that's going to come. So one can have a look in the power theme, and among the power theme, one can keep nuclear power as a theme going ahead.
Okay, so a lot of capex oriented plays that investors need to watch out for this year as well. But with that, we have to let you go, Kranthi. Thank you so much for your time, and thank you for taking out time on a New Year day. So hope that we connect with you soon as well.
Thank you, Loisha, and best wishes for the New Year to you and the viewers of Money Control.
Thank you so much, Kranthi. All right, let's take a quick check of the markets. Well, Sensex has intensified its sell-off and it is down about 200 points below that 78,000 levels. And even Nifty is down about 77, seeing a cut of about 0.3% below that 23,600 odd levels. So yes, so we did start on a positive note, we did start on a bullish note, but now we can see that some of the selling has been kicked in, and investors have been taking a bit of a profit booking ahead of the Q3 results number as well. Majority of the sectors have slipped in the green. Only one, which is your Nifty Media Index, has been outperforming, up about 0.8%. India VIX has also spiked up 1% at this point of time. Mid cap and small cap indices. Mid caps are seeing a cut of 0.1%. However, small caps are outperforming. They are up about 0.2% in this weakish market. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell, and we will be discussing about how the market has developed and what the stocks were in focus. Until then, signing off. Do stay tuned to moneycontrol.com for all the news updates and market insights.